Do you buy the dip in bonds? I'm totally confused about what to do with full faith and credit or just credit right now. Do you clip the coupon? Do you buy it, or do you just go to cash? Which is it?
You sell government bonds and you buy credit. There's been a tremendous repricing. You've had a flattening of the yield curve. There's a lot of concern that the Fed is going to move too quickly for the market and will lead to recession. And that's ultimately why the curve has inverted. That's nonsense. They're miles away from anything that looks normal. And I think this is an opportunity to get rid of any remaining government bonds you have, and then go back into the credit markets, go back into investment grade and high yield. You can do it in US and you can do it in Europe, and those are the things that you're buying on sale.
Bob, that word normal, what does that word mean anymore?
Well, for me, who's been around for 4 decades, it means getting the central banks out of the market and leaving it to people like me to price. And there's a very different operating model than what we're used to from the central banks. When I started in the business, the central banks extended credit to the banking system, and they controlled the cost of funding, and then they relied on the banks to extend credit into the economy. Now, they're controlling the cost of funding across the entire economy. It's gone too far. It's got to stop. And participants in the market like myself have to get involved again.
Bob, that's a desire. Is it a forecast? What makes it a forecast?
What makes it a forecast is Jay Powell yesterday, and Jay Powell saying it's time for them to exit the market, which I think they're going to do. They should announce that they're going to double the pace of tapering, so they should be out of the market by March. And then we should see rate hikes pretty soon after that. So they're going to start that journey to normal, and we're going to help them on that path.
All right, you're going to help them on that path. So completely courageous of you. I do wonder, though, when you say it's a buying opportunity for credit, particularly riskier credit, why this is a good entry point, given the fact that we are still so vastly below where we were before the pandemic when it comes to yields. Why is this an opportunity at 4.8% coupon on a junk bond?
For a number of things. For one, corporate profitability still remains very high. Companies have a lot of financial flexibility, and the companies we're talking to don't see any significant drop-off in aggregate final demand, so their top line's going to grow. They do see the input cost pressures, and they're starting to pass some of those along. And by the way, they've been raising dividends and buying back shares. They can dial that down a bit if they need to. But right now, we're looking at a consumer that's flush with cash, that's out there spending. Yeah, there may be some headwinds from the Omicron variant. We'll see over the next couple weeks and couple of months. But for now, corporate profitability looks pretty good. I want to be a part of that.
Bob, do you really think central bankers will ever get out of this market and let people like you truly price it? Or is there sort of an implicit put that if things get volatile enough, they'll step right back in?
Well, that's the debate. I start off by saying I'm used to one model, but when I look around our trading floor, a very large percentage of the people only know the current model, which has existed since 2009, where central banks do intervene in all sectors of the bond market. So, no, I think it's a tool that they've learned to deploy. It's not going to go away anytime soon, and they're going to have to gauge that with all the other tools that they have. And yes, financial conditions indicators are one of the reasons that you buy dips in risk assets. As long as they look at those things, they're backstopping the markets.
Bob Michael with us, JPMorgan here on radio and television. Bob, I'm not going to get you in trouble on China. Somebody else at JPMorgan had some challenges this week on China, but I am going to ask you about the Pacific Rim and about the great miss. Our David Wilson notices in equities, internationals failed. What do you do with international paper right now? I don't mean Turkey, but what do you do with the JPMorgan opportunity in international fixed income?
you go for it. And we've had a lot of conversations about emerging markets, specifically emerging market equities, and how earnings for companies across Asia in particular have come in higher than anyone anticipated a year ago. The stocks have gone nowhere. They've even drifted down compared to the double-digit returns in the developed markets. Next year is probably the year that stock prices catch up to earnings, but earnings are still going to look pretty good. So yes, we're also buying credit across APAC, in China, and across the emerging markets.
Is Europe a piece of that as well, Bob?
Yes, and in fact, we were looking over the last couple of days of going back into the European bank sector, particularly the additional Tier 1 securities and the lower Tier 2 securities, so the bank hybrid securities. So we do see some opportunities there as well.
You're not afraid of some speculation, so let me finish with this question. What did you think of Chairman Powell making that move a week after securing renomination, Bob? Did that stand out to you at all?
Well, the easiest path for him would have been to do nothing and coast through the hearings on his reappointment. And to suddenly start the tapering process, disrupt the markets, to me is taking some risk. What I want to know is what changed from Monday to Tuesday and what's going to change today from yesterday.
Yeah, I couldn't agree more. Tom, it's been a month since they announced tapering, and now we're having a conversation. What's changed in a month for him to say, you know what, maybe we should accelerate things?
What you see here is a grizzled pro like Bob Michele getting right down to the nitty-gritty. What changed in 24 hours? And that's a whipsaw. For people who are not in the game on this, John, we're all talking about the market action. We're forgetting about the losses earned and made over the last, say, 48 hours, 5 days. I really wonder what the carnage is out there.
So my final question to Bob Michele, Tom, is usually football-related, so we'll keep it consistent and remain on that
Not Alabama and Georgia, right?
Not Alabama, Georgia this weekend. Bob, confidence levels, I want to understand from your perspective, 10's back to 2 or another championship for Liverpool?
Another championship for Liverpool.
That tells you
off
everything
the
you need
charts.
to know.
They are a goal-scoring machine.